Let me know how many lives you've been on, all that fun stuff. Double tap the screen if you have not. Share this live with anybody you know that is interested in real estate investing. Let me know where you're from in the chat box and how many of my lives you've been on. Gonna let people get going, then we're gonna get on to this agenda. But I'm gonna do a little intro in this agenda. Gonna talk about a giveaway, and then I'm gonna really hammer the market really hard, the real estate market. I got some data and some things I want to show you. So share this live with anybody you know that's interested in real estate investing and that is worried about the market and how the recession is going to affect the market. So that's what this live, again, let me know how many lives have been on 1, 2, 3. Never done this live before. This is a new one. Let me know where you're from. That's important. Where are you from in the chat box is important, and double tapping the screen. I know it's annoying, but it helps get this out in front of more people. I'm actually going to be doing 2 lives. I'm going to be doing one on the market, then I'm going to be doing one on the BRRRR method. So 2 separate lives that are going to go up on my YouTube later, but for now, we'll be honest with you, we keep it straight with the Tiki and the IGs. We're going to talk about this. So I'm getting ready to get the ball rolling. All right, I can just do it. All right. And I'm gonna pretend like the live's starting now, guys. So double tap the screen, share this live, interact. I'd really appreciate it. Let me know where you're from, what questions you have. I'm gonna talk about the market. All right, here we go. All right, welcome to my live. What's going on, everybody? What I would like to do is go over the agenda here momentarily. What I want to talk about is the market for the most part. I'm going to introduce myself as soon as I'm done with the agenda. I'm going to do a giveaway, and then the majority of this live I'm going to be spent talking about the real estate market. I'm going to get into some stats and just show you a simple chart to show you about the recession and the market, and does the recession affect the market, and all those kind of things. So let me know where you're from in the chat box if you have not. So let me know where you're from in the chat box, and give this video a like. Tiki and IG can double, but if you're on YouTube, just hit that like button. It really would appreciate it. If you get 1 ounce of advice or 1 ounce of knowledge out of this, it really helps the algorithm. So please give this video a like and a share if you want. All right, introduction. My name is Sam. I'm a real estate investor. I own a house buying company that's going to flip about 300 houses this year in St. Louis. Majority wholesale with some fix and flips mixed in. I also own a $40 million rental portfolio that I bought without using any of my own money. Have an offer out on a pretty big deal that will add 50% to that. We'll see if I get it. I'll do a video on that, obviously, if I do. But I'm actively invested in real estate. I also have an education brand, Faster Freedom. Follow me on TikTok, YouTube, Instagram, all the platforms. Got a podcast called Ordinary, I got to get the name because this new Ordinary Guys Extraordinary Wealth just dropped, so check that out on, iTunes and Spotify, wherever you get your podcast. So check that out. So that's a little bit about me. Also have a nonprofit that we raise mental health awareness. So I do a lot, done all right for myself, and I like to help others and give back with a nonprofit and give as much free education as I can. Enough about me before we get into the meat of the market and the chat, and then we'll get some Q&As towards the end. All right, giveaway. I recently just recorded a 24-minute free training. So check out the description below of this video, or just DM me on Instagram. Just say I'd like the free training. I'll send you the link directly on there. You don't even send me your you don't even need to send me your phone number. You don't need to send me your email address. I'll send you the link directly on Instagram. So it's a free training that talks about how to buy rentals without using any of your own money. Super, super valuable. Free. It's free. There's no strings attached, really. It gives you the option to talk to my team if you want further, coaching or teaching. If not, just enjoy the free training and the thousands of hours of stuff I have on TikTok, YouTube, and Instagram. And I got a book coming out in a couple months that you're going to do a pretty cool release thing. So make sure you're following me on the platform so you hear about it. All right, let's get into the market. Let's see if I can do this fancy footwork. Chrome. All right, so what I would like to do, and hopefully you can still kind of see, is talk about how recessions affect the real estate market, okay? Because everybody's freaking out about recessions these days, right? So double tap if you don't mind. Give this video a like if you have not. So there's a recession. I don't think anybody can deny that. Not even I will deny that. Now, meet Kevin and people like that on social media, especially YouTube, will give you fear-mongering, thumbnails. Which the thumbnail is the point to click on the video, but my beef with that, and I got a YouTube video coming out about, not my beef with Meet Kevin, but my issues with how he does things is 90% of people see a thumbnail and continue to scroll. So if he crushes it, he gets a 10% click-through rate, meaning 90% of people that see that thumbnail don't watch the video. So 90% of people that see Meet Kevin's thumbnail think that the real estate market is crashing, and it's not. And he even admits it's not. but most people think it is. So let's talk about it, because the recession is happening for sure. Does that mean a real estate market crash? So let's look at there in the past 50 years, since 1960, so I guess the last 60 years, there's been 1, 2, 3, 4, 5, 6, 7. There's been 7 recessions in the past 60 years. Good? Everybody see that? This is a chart. Look it up yourself. This is a chart that everybody uses, the median sale house prices sold in the United States. So super simple. I'm not trying to give you a chart and talk about unemployment versus median income versus if you're laid off and mixed with a bunch of charts to try to prove my point. This is a simple chart that says the median sales house prices for the United States over the past 60 years, and gray bars charts are recessions, meaning 2 declining quarters of GDP. So there has been some recessions, only 7 of them in the past 60 years, right? Everybody thumbs up, thumbs, you agree? You see that? Now, let's go back and look at the recessions and see what the real estate market has done, right? I'm just going off historical data, okay? So, of the past 7 recessions, 5 of them, the real estate market has increased. That's right. Of the last 7 recessions, let me repeat that, 5 of them, the real estate market has increased. 2 of them, the real estate market has decreased. So, whatever 5 divided by 7, whatever that math is, probably like 70%, 60, 70% of recessions, the real estate market does better than it does, than the actual economy. So, in 1970, there was a recession, okay? Q1 of 1970, sorry, just got to spit some data out. So Q1 of 1970, right here, the average house sale price, you probably can't see that, the average house sale price was $23,900. Obviously cheap in the 70s, but $23,900. When that recession was over, the average house price was $22,600. So during this recession, the housing market dropped $1,300 per house on average. Obviously, some were hit more, some were hit less. So during this, the one that the market actually did dip, it dropped $1,300 on average, and then the quarter after that, it was up $400 from where it was. So it got up to $24,300 just 3 quarters later. So this dip, this recession in the early 70s, the real estate market was affected, but not very much. Now, the next 5, there was no dip. All right, let's look at this one. This one happened in the mid-70s. Another recession in like 1973, 1974. The real estate market, when it went into recession, the average house price was $34,000. All right, $34,000. When it exited the recession, the average house price was $39,000. So $34,000 to $39,000 in like a 2-year period. So that was a long recession, a 2-year recession. That's a long-ass time. That's what it was in 08. So during that time, the real estate went up 5,000. So what is that percentage? It went up 5,000, that's not very much money, but as a percentage from 34 to 35,000, that's over 10%. So the real estate market went up 10% during that recession. And that's when interest rates were high, which interest rates aren't even high. Does the pop one, as somebody said, that's so funny. Double tap the screen, share this live, give this video a like. All right, I know this is kind of boring. Do you want me to keep going? Basically, this recession, real estate prices went up, this they went up, this they went up, this they went up. And from the actual recession, I don't want to bore you all too much, from the actual recession that hit. So in 2007, real estate market prices went down, 2007. The actual recession hit, 2008 timeframe. So from the recession, obviously the economy was affected, but this is the recession. It was a couple years. Real estate prices dipped 13,000. 13,000 on average. Now you can see they started dipping before that, but that wasn't a recession. So the actual real estate market dipped during an actual technical recession, $13,000. All these other recessions, the real estate market actually increased. And this one, there was a ton of bad loans out there, and supply was high. Now supply is not high, and there are not a ton of bad loans out there. Now, obviously, this is not sustainable, that crazy uprising, so some little dip and some little change will probably happen. The real estate, or the actual market is technically going through a recession, the actual economy, but not the real estate market. Now, I don't know if you all are going to like that. That was some extra data that I put into that. I may do a video on that explains a little bit better, but the bottom line is, over the past 7 recessions, 5 of them, the real estate market increased. 2 of them it decreased, but immediately after it popped right back up. It's not about timing the market, it's about time in the market. If you buy good deals, buy them at discounts, then you will be just fine. A 5 to 10% dip, which is realistically what will happen in the heaviest of markets being hit, like I don't see anything more than that over the next couple of years, that would be drastic in my opinion, 5 to 10%. If you're buying, if you follow my stuff, you're buying at 20, 30% below market price, then a 10 to 15 to 5% dip will not put you underwater. It won't affect you. If anything, it will just continue to churn through until prices go back up, because they always go back up. And interest rates have already dropped a little bit recently. I didn't want to pull up the interest rate charts to bore you too much with information. I usually just kind of off the cuff it and kind of give you my thoughts and opinions based on fact, but I wanted to pull some actual facts up to show you that the market will be okay. Everything will be fine, I promise. Double tap the screen, hit the like button if you have not yet. So that is the market thoughts from a little bit of a back end perspective to kind of show you what's going on there. So hopefully that shed a little bit of light on, you know, what the actual market can or cannot do and what it will or will not do. So yeah, hopefully that that helped a little bit. Quick one this week, but I will see you next week. Every Wednesday we